performed. Today we're going to look at specific entries. The second type that we talked about was unearned revenue. Okay, unearned revenue. Unearned revenue, we always debit what? Always debit some liability. We will always credit a revenue account. Okay, so you see how these are kind of opposite of one another. Up here we debit expense, credit revenue, credit asset, debit liability. These two are kind of opposite. Third, we had, if I don't get this order right, forgive me, accrued revenue was one. I can't remember if accrued expense or accrued revenue is covered first, so I'll do revenue. Accrued revenue, we debit an asset account, we credit revenue. The fourth is accrued expense. And on an accrued expense, we debit an expense and credit liability. And finally, we had depreciation. That was our fifth one we talked about the other day. When we talked about what depreciation was, why we have to have it, and what the entry looks like. And the depreciation entry features a debit to, we can be a little specific here, depreciation expense, and a credit to accumulated depreciation. Alright, now, accumulated depreciation is what kind of account? Remember? It's a contra asset. Okay, it's an asset account. Every other asset account that we've talked about so far has a normal debit balance. In other words, we increase with a debit, we decrease with a credit. This is a contra asset, meaning what? We increase with a credit, decrease with a debit. Alright, so accumulated depreciation, contra asset. Alright, so that's what we're looking for. We're going to do, I think we do one of all five in this problem. Problem 3-3A. So, we all feel okay with where we stand right now. We okay? Got it? Know where we are in the game? Done the journal entries. We're at the end of the month. Month is over. We've got the ledger complete. What I didn't include was all the journal entries we touched on. No, I just gave you the balances here. We took these balances, created this unadjusted trial balance. Now we're ready to adjust. Okay? So here we go. We flip over on to page 140. Here's what it says. For preparing the adjusting entries, the following data were assembled. And this is going to be something like you will be looking at on the exam. So here is letter A. The challenge in these is to read the information that you're given and pick out which 5 of the entries you're supposed to do. All right? Once you can sort of master that skill, it's not so bad. But it is kind of tough to read the adjusting data and figure out where you land here. So I'll kind of give you some thoughts on what to do there. All right. So letter A says this. Fees earned but unbilled on June 30 were $12,700. All right, so when you see fees earned, your mind goes where? Should go where? Where? Revenue world. All right? So when I see fees earned, there are certain words, certain phrases in this adjusting data that should act as a trigger to tell you where to go. All right? I've got 5 options. Depreciation is sort of the outlier. If you see the word depreciation, you have a depreciation entry. All right, so let's kind of separate this one off by itself. That one's very obvious. Okay? So we're dealing with revenue. Do you see revenue in this entry? Not there. Alright? That one's out. That doesn't deal with revenue. Do you see revenue in this one? That one's out. Okay? So that leaves what? It's either unearned revenue or accrued revenue. Alright? Unearned revenue means what? Unearned revenue means I have received money but not performed the service. Accrued revenue means what? I have performed the service and have not billed. Okay? So the question is this. Have I performed the service? It says fees earned, so that means what? Yes, I have. Okay, I have done what I need to do, but I haven't billed or received any of the money yet. Okay? So since I have performed the service, I know I'm not dealing with what? The revenue is, it's not unearned. In fact, it's earned already. So I'm dealing with what? I'm dealing with an accrued revenue. Okay? So, the way you go at this, if you're not recognizing pretty quick what's going on, you eliminate. Okay? Fees earned tells me revenue. This has nothing to do with revenue. This has nothing to do with revenue. Okay? Have I performed the service? That's the next question. In this case, yes, I have. So I have what? That only leaves accrued revenue. This is for when I have the cash but haven't performed the service. This is for when I perform the service, don't have the cash. Okay, so here we are. We're going to debit in this adjusting entry, and remember, adjusting entries always happen at the end of the month. Looks like we're dealing with years. It says electro repairs and service and electronics repair store repair the unadjusted trial balance shown below at the end of its first year of operations, and the date is June 30. June 30, 2014. All right, so here we go. I know I'm here, at least in part A, right? I know I've got accrued revenue. So I've got to debit some asset. When somebody owes me money, remember I performed the service, I haven't got my money. When somebody owes me money, what asset do we use? Remember? Accounts receivable. All right? So the debit is going to be accounts receivable. And my amount, it says fees earned but unbilled were $12,700. So my amount is $12,700. The offset is what? Remember, GAAP allows me to book revenue. All right, the whole reason we're doing this is what? I have to recognize revenue the period in which it is earned, not necessarily paid. Okay? So, here we are. We have to credit some revenue account. And the revenue account that we're going to credit, in this case, will be fees earned, $12,700. All right, so that's adjustment number one. Questions on that? You okay? You see it? Kind of a little bit? All right, part B, supplies. What do I know about supplies? It's an asset. Okay? So as I look through here, I'm worried about entries that have to do with assets. Okay? Depreciation, again, just hold that one off. You'll see depreciation. You'll know depreciation when you see it. So out of these four, this one deals with an asset. This one doesn't. This one does. This one doesn't. All right? So it's either 1 or 3. Right? Can you buy that? You with me? Okay? All right? So it's either 1 or 3. The question is this. Accrued revenue means what? It's exactly what we looked at. We performed some service we haven't billed. Okay? This says what? Supplies on hand June 30 were $4,175. Okay? So which is it going to be? You see anything about revenue in there? Nothing about revenue. That eliminates that one. So it has to be what? It has to be a prepaid expense. Alright, so I'm going to debit some expense and credit some asset. So here is entry, what they call entry B, on June 30th, 2014. Alright, I'm up here, prepaid expense, I'm debiting some expense, I'm crediting some asset. Now we have to pay a little bit of attention here because this one's kind of tricky. Notice what it tells you. It says supplies on hand June 30 were $4,175. Here's your tendency when you read that to go up here and the expense we're going to use is called supplies expense, and we're going to credit the asset supplies. Okay? Don't write this. This is the tendency. All right? You say, all right, $4,175. That's what I put up here. What's wrong with that?
That's not what you started with.
All right. I've got to be a little bit creative here. According to this, I gotta come back here. You got to do this. All right. Supplies. It says the balance is $21,600. So as I look back in my ledger, it says the supplies balance is $21,600, and there it is. All right? Well, this is me going into the supply closet, looking at how much we have left. It's $4,175, which means what? I don't have $21,600. I have $4,175. So I've got to do what? I've got to do this entry to get this balance down to $4,175. So here's the question. How do I get this down to that? I got to do what? I've got to plug some credit in there for supplies, right? Okay? The credit represents what? Not how much is left, but how much I used throughout the year. Okay? So the question is this. To go from $21,600 down to $4,175, I've got to enter a credit on supplies, which is what I'm about to do right here, for what amount? It's the difference in $21,600 and $4,175. Okay, so I got to subtract those two figures in order to get the correct number. All right, the correct number is let's see, 25. 4, 7, is that right? 17,4, is that right?
Yeah.
17,425. See how we did that? That was a little tricky, all right? The prepaid expense entry will be given to you. Part A, the accrued revenue, it'll always look like that. So once you sort of recognize that pattern, it'll always sort of stick. This one can be given to you in two ways. It's either going to be presented to you like this, or it will say something like supplies used during the year were $17,425. Okay, so you gotta be careful on that one and take what they give you. They're either going to give you the final balance that you're trying to get to, or they're going to tell you straight up what the number is that you used.
I thought you were saying that the debit would be $41.75 and the credit would be the remainder.
Yes. See, I'm here according to my unadjusted trial balance, which came from the ledger. That's my balance in supplies.
Mm-hmm.
Okay? So the way I always explain it is this. Imagine we have all of our supplies are paper clips and they all cost $1. Alright? So I have 21,600 paper clips sitting in my supply closet beginning of the year. Alright? I walk in the supply closet, I count, I find out there are 4,175. Which means what? Which means I used 17,425. Okay? So I'm starting here. I have to get down to here. How do I do that? I've got to enter a credit on that side.
Okay.
Okay? And the offset is expense. Okay? This is going to flow through to what? It's eventually going to find its way on the income statement. It's an expense account. So income statement is where this one's headed. That's headed to the balance sheet. This one, the prepaid expense, is the one that's missed the most on the exam. Because there's multiple steps, and it's just kind of hard to get to that one. So, all right, questions? Welcome. Questions on that one? Okay. All right. C, you ready? This is easy. Depreciation. Where are we? We're down here, right? All right. So. Third adjusting entry is depreciation. It says depreciation of equipment was estimated to be $7,400 for the year. What does my entry look like? Always debit depreciation expense. I always credit accumulated depreciation. So depreciation expense, I credit accumulated depreciation equipment, and my amount is $7,000.
Now that's for the whole year. Do we include that in 1 month?
We're working on a year cycle, and where I see that is in the instructions. It says On page 139, Latro Repairs and Service and Electronics Repair Store prepared the unadjusted trial balance shown at the end of its first year. So that kind of gives me my time contact. So this would be for a year. You know, you have to realize these are illustrative type things. More true to form, companies are going to book depreciation once a month. But you know, the concept is exactly the same. We're still recognizing the decrease in the value of the asset, and that's how we do it. Okay. All right, another tough one. The balance in unearned fees represented the June 1 receipt in advance for services to be provided. All right, so let's think about this. It says the balance in unearned fees. So, what is the balance in unearned fees? Here's unearned fees. The balance in unearned fees is $24,000. Okay? So, what is that? Well, it represents, according to this, the June 1st receipt in advance for services to be provided. Okay? So, unearned fees, what I have to know is that it's a liability account. That's the connection I got to make. All right? So, as I look through here, there's only two options that have to do with liabilities. It's either unearned revenue or it's accrued expense. It's one of those two. Everything else can be eliminated because it has nothing to do with liabilities. How do I know to look here? It's telling me, right? Unearned fees is sitting there. Okay? So, this balance, this $24,000, represents cash in hand that I have. Okay? I have not done what? I got this. Why? Somebody hand me money? I owe what? I owe the service. Okay? So I have the money. I have not provided the service. Okay? So, out of these two options, you know, there's my liability, there's my liability. Which is it? Well, unearned revenue deals with what? Money that I have not earned, which is exactly what this is. It's money that I have not what? I have not earned. Okay? So, here's what it says. Only $14,200 worth of the services was provided between June 1 and June 30. So let's think through this a little bit. If I owe $24,000, okay, and that's on June 1st, that's what this says. On June 30, given this new piece of information, do I still owe $24,000? I do not. Okay? So therefore, this is incorrect. Why is it incorrect? Yeah, we've done some of it. We didn't do all of it, but we did do some of it. Okay? What did we do? Well, it says only $14,200 of the services was provided between June 1 and June 30. So I need to do what to this account to make it accurately reflect what I still owe? Alright, I've got to reduce this by the $14,200 that it says I provided. Okay? So, that's why we're going to debit a liability. So over here, 630.14, debit, unearned fees, they call it. That's a liability. For what? It says we have provided $14,200. Alright, so I've got to reduce this by $14,200. And what did it become? It went from unearned revenue to earned revenue. Alright, so I got to credit fees earned, $14,200. Alright, so here we are. We debit a liability, we credit revenue. Alright. Letter E. Unpaid wages accrued on June 30 were $1,100. Wages is what? Wages are expenses that we pay. Salaries to employees, or wages. Alright? So, we've got to be able to read this, and when we read a word like wages, we've got to connect in our brain that we're dealing with an expense. All right, that's where you got to pick up the ball and shoot it. All right, wage, expense. All right, so out of these four, remember we separated this one off. Out of those four, only 2 of them deal with expense. Okay, so the question you have to ask yourself is this: we've either already paid the expense or we haven't paid it. In this case, we what? We have not paid wages. These are wages that have built up but have not been paid. Okay? So we're down here in accrual world. So this is what the entry looks like. So I'm going to debit some expense, I'm going to credit some liability. Alright, remember, I have to recognize expenses in what? In the period in which it matches the revenue. Okay? So I gotta get this expense on the books. Wages. Expense is going to be my debit. It's $1,100. And wages, it says I need a liability, so wages payable, $1,100. All right. Let me add a little bit of color to this. Typically, let's see, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. I need the 30th to be on a, that's fine. That's June 30, by the way. So that's July 1st, 2nd, 3rd. This is the 29th, 28th, 27th, 26, 25, 24, 23, 22, 21, 20. All right. Typically, employees are paid, and this is what most businesses do. Not all businesses do this. Most businesses do this. You get paid bi-weekly, which means what? Not twice a month. You get paid every 2 weeks. Okay? So what that really means is there's 2 months out of the year where you always get 3 paychecks, and those are beautiful months. Okay? So you have that to look forward to. Let's assume that that Friday is payday. Okay? And let's further assume that this is kind of funny numbers, but you see sort of what the problem is. Here's where the month ends. All right, that's June. This is July. Okay? And the accrual basis of accounting says what? Hey, all these wages for these days have to be recognized when? They have to be recognized in June. But I'm not giving the paychecks out until when? Payday's not until July 2nd. Okay? So on this July 2nd paycheck, there are wages related to June and July. Okay? So what am I doing? I'm taking the portion on this day, that's when my adjusting entry is made. I'm taking the portion that's attributable to June, $1,100, and I'm doing what? I'm recognizing the expense in the period in which we owed it, technically. Okay? And I'm saying what? I haven't paid it yet on this day, so I set up what? I set up a liability. I still owe it. Now, on July 2nd, what's going to happen? I'm going to come back. Do I still owe? Hopefully not. Okay, so I'm going to do what? I'm going to reverse out this liability, all right? Credit wages expense for just the 2 days that relate to July, and then credit cash for the payment. All right, so this will eventually, in the following month, reverse itself. Okay, and that liability will no longer be there. All right, so those are the adjusting entries. All right, I have seen enough exams on these to know that these will absolutely wear you out. All right, so you've got to be really on it when you go through these. All right, so this part here, the second exam is a lot of, there's a lot on the second exam. So there's a lot of moving parts and numbers that flow through. So you've got to make sure we get this. All right, now, let's think about something. What do we do? All these numbers were what? That's on the unadjusted trial balance. Then we did what? We came back over here and did entries. Okay? So these are no longer what? These are no longer valid balances, are they? They're what? They're old. Some of them are obsolete. Okay? So, just like we did in test number 1, after we have the journal entries, we got to do what? We got to post. Okay? We got to post over here to the ledger. So here we go. Just like last time, I'm going to do the adjustments in red so you can kind of see exactly what's going on. Here we have accounts receivable. I have a debit for $12,700. So I'm going to go over here to accounts receivable. Put $12,700 there. This one is posted. Fees earned, I have a credit for $12,700. Come over here. Plug in my credit for $12,700. With me? Same posting as last time. Alright. Supplies expense, $17,425. You come over here, there is no supplies expense. So we introduced supplies expense account during the adjustment process. That's no problem. I come right here, I set up supplies expense. What did I do to it? I debited for $17,425. What did I do to supplies? Credit, $17,425. So there's that. What's next? Depreciation expense, $7,400. Depreciation expense is another one that I don't have yet. All right. So depreciation expense I have to add. That's no problem. Depreciation expense is $7,400. Accumulated depreciation, what kind of account is it? Contra asset, so it does need to go in the asset section. I don't have that account set up, but I can set it up. Accumulated depreciation, equipment, and I've got $7,400 there. Next entry, unearned fees, $14,200. We got a debit. Fees earned, we have a credit, $14,200. And finally, we get down here to wages expense. Wages expense is debited for $1,100, and wages payable. I don't have wages payable set up. That's fine. I can set it up. Wages payable is $1,100. All right. So there we have it. Now I got to do what? This is kind of the last little step here. We do what? All right. Yeah. We got to create an adjusted trial balance. So out here next to it, what I'm going to do is we'll do this. And we'll have a debit column and a credit column. And we'll have to ask ourselves this question: did the balance change? All right? So you look at something like cash, and you notice what? Nothing happened to cash. It's still the same exact balance. All right? Which means what? Cash is still going to be $13,800 on the adjusted trial balance. Accounts receivable did change. See what we did here? We put an extra debit in there. So accounts receivable is no longer $90,000. It's what? It's $90,000 plus $12,700. Okay, which means what? $1,027 is my new balance. Plug that in right there. $1,027. We know what happened with supplies. All right, supplies, the balance is at 4. Is that right? Is that it? 4125? 75? 25. Okay, here's my balance and supplies, there it is. Okay, exact same process we did before. It's not different just because it's adjusting, it's the exact same thing. Equipment is still 154,800. I do have now accumulated depreciation, so I gotta do what? I don't have it over here, so I need to add it. Accumulated depreciation on equipment. It is a credit balance, so I need to throw it out here in the credit side. Accounts payable, nothing happened with accounts payable, so it's still 21,000. Wages payable. I don't have wages payable yet, so I got to add wages payable. Wages payable, the balance is 1,100. Here we are. We got that side taken care of. Unearned fees. Any action there? Yeah, we started out with 24,000. We did 14,200, which leaves what? Leaves a balance of 9,800. Okay? So when I see this, what does that mean? I still owe what? Remember what unearned fees is? It's money that I have in hand that I owe what? I owe the service. Alright? So I still owe $9,800 worth of service here. So unearned fees is not 24,000, it's what? It's 9,800. 9,800. Wolf capital is still 162,000. That didn't change. Wolf drawing is still 18,000. That didn't change. Fees earned did change. So I have a new balance there. I was at 393. I got 12.7, and then I got 14.2. And my new balance is 419,900. So fees earned 419,900. Wages expense is next. It did increase to 127.1. It's a debit. 127.1. All right. Rent is 96. It didn't change, so rent expense is still 96,000. New balance there. Utilities did not change. Still 69,000. We have two new expenses: supplies. So I need to add supplies, expense, and depreciation expense. And the amounts there: supplies is 17,425, depreciation is 7,400, and then miscellaneous, which is always listed last, did not change. It's 10,800. All right. Now, once we get to this point, we cross our fingers, hope everything ties out. I think I have the number here. 600 plus 12.7 plus 17,425 plus 4, 2 plus 1,100. Should be 652,825. 652,825. All right. Now, on the next exam, you'll have to do that. Okay? I'll start you out with an unadjusted trial balance, just like we started out with here. I'll give you adjusting entries, so you'll have to do the adjusting entries. All right? Once you do the adjusting entries, you got to figure out how to post them. And once you post them, you have to create the adjusted trial balance. Okay? Now, the adjusted trial balance is very important. Here's why. It's from the adjusted trial balance, these numbers, that I'm going to do what? I'm going to actually create my financial statements. Okay, so income statement, statement of owner's equity, balance sheet comes from these numbers, not these numbers. All right, so on the next exam, what you have to do is you have to do the adjustments. You have to get that. All right, from this, you have to create the income statement, statement of owner's equity, and the balance sheet. It's vital to get these right, because if you get off track on the adjustment side, that means what? Your income statement is going to be wrong. If your income statement is wrong, your statement of owner's equity is going to be wrong. If your statement of owner's equity is wrong, your balance sheet is going to be wrong. If you get your balance sheet wrong, you're going to miss your closing entries, which we'll introduce. If you miss your closing entries, you're going to get the post-closing trial balance wrong. Okay? So this is the beginning of a lot of mistakes. All right? And I don't feel real good about what we did today. Okay? So, y'all need to read the book. We're going to go over one more of these. All right, next week we're going to go through more adjustments. This is something we've got to get right. All right, now I'm going to say this one time. I see a lot of phones out in this room. I will give you 2 tests. All right, I will give you a writing exam if you like to write. That's the assumption that I make. Or I will give you the regular test. I will let you choose. Okay? You'll find out which one you get on test day. Just put them up for this 50 minutes. Got me? We good? All right. Y'all have a good weekend. I will see y'all on Monday.